Welcome to today's episode of the Pink Door podcast. Today we are doing a high-speed deep dive into, well, one of the South Shore's most interesting real estate markets, Norwell, Massachusetts.
Yep, and we're focusing specifically on the November 2025 activity in the 02061 zip code.
Exactly. And the source material we have is, it's just this incredible stack of market data, trend reports, and even down to the street-level property metrics.
It's all compiled by Realtor James Aldred, so we're looking at some really hard numbers here.
And our mission, as always, is to take all this dense data and, pull out the vital signs for you.
We're going to find the real story, the strategic takeaways, whether you're thinking about selling a home or maybe trying to buy one.
Okay, let's unpack this. Norwell is showing some intriguing trends this month.
For sure. I mean, on the surface, it looks like a fiercely competitive market, but there are these subtle shifts under the hood that we really need to look at.
Let's start with that big picture, the overall market health. If we combine single-family homes with condos, the months of inventory, or MOI, is at 2.25.
And that number, 2.25, that's basically the mathematical definition of a strong seller's market.
Right.
It means if nothing else came on the market, everything would be sold in just over 2 months. Anything under 4 months is generally considered hot for sellers.
But here's where it gets a little more nuanced. That 2.25, while it's low, is actually up 22.41% from the month before.
And that's the most fascinating signal right there. Inventory is creeping up. So you have to ask why.
Is it just the season, winter slowdown?
It could be. Or it could be a sign that some sellers are, maybe getting a little nervous about higher interest rates sticking around, and they're trying to cash in on all this appreciation. The supply valve is opening just a little bit.
And you see that reflected in the speed of sales, too. The median days on RPR is only 5 days.
Just 5. I mean, that is a blink and you miss it pace. It just confirms the competition out there is still intense.
But, like with the inventory, there's a trend to watch.
Exactly. That 5 days, as fast as it is a 44.44% increase from October. So the absolute peak speed. It's eased off a tiny bit.
So it's still fast, but maybe buyers have a weekend to think instead of just an hour.
That's a good way to put it. Now, that seems to contradict the pricing, though.
Right, because if homes are sitting just a bit longer, you'd think prices might soften. But the list-to-sold price percentage is 98.6%.
Exactly. A 98.6% ratio means buyers are, on average, paying just 1.4% below asking. That's incredibly strong.
And that number actually went up from last month.
It did by about 2%.
So how do you square that? Homes are taking a little longer to sell, but the ones that do sell are getting even closer to the asking price.
It points to a market that's splitting in two. Market stratification.
Okay.
So first, you have the sweet spot of the market. Homes that are priced right. They are still getting multiple offers, selling fast, and that keeps that price retention number high.
And the second part?
The second part is a smaller group of, let's say, overpriced or very high-end listings that are sitting longer. They're the ones pulling the average time on market up, but not enough of them are selling yet to drag the price numbers down.
That makes perfect sense. The core is still hot, but the edges are getting a little soft.
Precisely.
Let's talk about the dollars then, because the appreciation in Norwell is just staggering. The median sold price in November hit $1,150,000.
A huge number. And that's up almost 7% just from October. But to really see the wealth creation here, you have to zoom out.
Right, let's look at the market snapshot data.
Over the last 12 months, the median sold price is up 25.1%. So we went from about $919,000 a year ago to $1.15 million today.
$250,000 gain on the median home in 1 year.
It's massive.
We have phenomenal growth over 12 months, but here's where it gets really interesting connecting that to the 3-year view.
Yes. If you look back 36 months, the median sold price is up 47.44%.
Wow.
It's gone from $780,000 to $1,150,000. That's almost 50% equity growth in just 3 years. This isn't just a momentary hot streak, it's a sustained trend.
Incredible. But this brings us back to that market split you mentioned, the disconnect between what's selling and what's sitting there.
Right. The median sold price was $1,150,000.
But the median list price for homes that are currently active...
Get this. It's $2,364,500.
More than double. I mean, that's not a gap, that's a chasm. Are these even the same market?
This raises an important question, and the data suggests no, they're not. It's a severely bifurcated market. The homes that are actually selling are concentrated in that high seven-figure to low million-dollar range.
So the active listings, the inventory that's building up, is almost all at that ultra high end.
Exactly. It's weighted heavily toward new construction, huge estates, homes priced way above the typical Norwell sale, and that's what's pulling the median active price up so dramatically.
So the engine of the market, say, below $1.5 million, is just running at high speed.
Full throttle. But the market above, say, $2 million is where you're starting to see some friction and inventory pile up.
And you can see that in the activity report.
You can. If you look at homes that closed in the last 3 months, their median price was only $980,000, and they took about 12 days to sell. Now compare that to the active listings. Their median time on market is 46 days.
46 days versus 12, that's a huge difference.
It tells the whole story. The faster movers are under $1 million, and the higher price homes are waiting a lot longer.
Let's zoom in on some specific examples then, because you can really see this playing out.
For sure. Look at the speed when the price is right. 665 Grove Street, listed for $779,000.
How long did it take?
It went pending in 2 days.
2 days, gone. That just proves that for anything priced, reasonably under that $1 million mark, buyers are ready to pounce.
Instantly. But even at the high end, if the value's there, it can still move fast. Take 37 Tara Drive. It closed for over $2.3 million.
And it sold in
just 14 days. But that was likely a unique property, probably brand new construction or something with a specific feature a buyer was waiting for.
So that's the exception that proves the rule.
Right. But in sharp contrast, the data also shows what happens when you miss the mark on price.
And we have a perfect example of that.
We do. The outlier here is 25 Gendoran Place. It finally closed, but after 87 days on the market.
87 days in a market where the median is 5? That's an eternity.
And to get it sold, the list-to-sold price data shows it needed a massive price cut.
The report says it closed for about 15% below its final list price. That had to hurt.
Absolutely. When your property sits for 3 months in this kind of market, the power shifts completely to the buyer. That steep cut was the only way to move a listing that had gone stale. A powerful lesson.
So that contrast really says it all, doesn't it? A 2-day sale on Grove Street versus an 87-day ordeal on Gendoran Place.
It encapsulates the whole Norwell story. Demand is there, but buyers are disciplined.
Okay, so let's synthesize this. What is Norwell's November profile in a nutshell?
It's a fast, high appreciation market with a critical caveat. The sales volume is all happening around that $1.15 million median, and it's moving at lightning speed. It's a strong seller's market. But the luxury pool, up around that $2.3 million median, is where inventory is building up and things are slowing way down.
So what does this all mean for you?
If you are a seller in Norwell, the equity you've built is fantastic news. 47% in 3 years is incredible. But if you're pricing at the very high end of the market, you need to be prepared for that 46-day median wait time and possibly a price cut.
Be realistic, basically.
Very. Aggressive pricing could mean a long, long wait.
And if you are a buyer trying to find your footing in this market,
you have to be ready to act with surgical speed for anything under $1.2 million. Those are the homes selling in 5 days or less. You have to be ready to go.
And where's the opportunity?
The opportunity, the strategic advantage, is in that luxury tier. If you're looking above $2 million, you have a bit more time and, crucially, a lot more leverage to negotiate than the buyers fighting it out below.
That's a brilliant breakdown. Okay, before we wrap up, let's leave our listener with one final provocative thought from this data.
Let's do it. Let's connect two numbers. Over the last 12 months, the median estimated property value, what data models think homes are actually worth, grew by a very healthy 10.5%.
Okay, 10.5% growth in actual value.
But over that same 12 months, the median list price, what sellers are asking for, grew by 63.07%.
63%? Whoa! That's a massive gap between value and expectation.
It creates a huge pressure point. So the final thought is this. Are Norwell sellers, especially at the high end, just getting way ahead of themselves? Are they adjusting their prices based on past appreciation so quickly that they've created a major disconnect between their optimism and what buyers are actually willing to pay?
That discrepancy is going to be the key thing to watch going into 2026.
It's the single most important trend.
An excellent data-backed point to think about. That was a truly insightful deep dive. Thank you for joining us. If you have any questions about today's episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore, from Southie to Sagamore, give Jim Aldred a call. He would love to help you. Thanks for listening, and see you next time on the Pink Door Podcast.